Hello traders, Gary Wagner here, 2:15 in Honolulu, 7:15 in New York on Monday, 6th day of February 2023, and this is the daily report for gold and silver. An interesting start to the trading week, considering that Thursday and Friday resulted in approximately a $90 per ounce decline in gold. It didn't continue to sell off, and at the same time, it didn't provide enough information to say that this current level at 1880 is a definitive bottom and that it'll move to higher pricing. Gold, basis most active April, is at 1880.20, a gain of $3.60 today. The most impressive component to today's fractional gain in gold is that was accomplished in light of an extremely strong dollar, up 0.71%, with gold up 0.19%, which means it had very, very strong headwinds with dollar strength and still closed fractionally higher. Lastly, silver did decline today, almost a full 0.5%, 0.47%. It gave up 10 cents, and the most active March contract is currently fixed at $22.30. Traders, I apologize about the delay in releasing our daily report today. We had an interview with Robert Kiyosaki that went longer than expected. Nonetheless, the question we must ask ourselves is whether or not we saw a recovery today, considering the two-day decline on Thursday and Friday that amounted to approximately $90, considering that the rally began November the 3rd and only has had one correction, which is the move from 1615 to 1790 and the correction to 1718 as a kind of a wave two. We are now in a fourth wave. Typically, as I talked about on Friday, you get one shallow and one deep correction, which is why I have created a chart specifically of the first leg of the rally, 1618 up to 1790, and then the correction to 1719. It falls at the 42% retracement, meaning it's over the 38% retracement, which is neither extremely deep or extremely shallow. Shallow is 23, deep is 61. So we're right at middle ground, which is exactly the same as our current findings, which is we're at the 38% retracement level, which means we need more data to determine whether or not the correction has concluded at this price point, and we'll see it return to a bullish mode. This last chart is also a daily chart and combines both fib retracement data sets, leg 1, wave 2 correction, wave 3, and wave 4. As you can see, it's also at 38.2%, just as this first correction. What we will want to see is a defined bounce for more than one day. We did close above this. As we point out in the opening letter, the gains would be substantial if it wasn't for dollar strength. Therefore, a strategy I'm very comfortable with to issue our next trade alert to catch the next rally up is to buy effectively when we see gold close above today's high. That high came in at 1893.70. We'll round it up to 1894. A close above that would signal an entry price and the beginning of a next wave, and a strong indication that the correction did in fact conclude at the 38.2% fib retracement. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.